This is a marketing communication. The conversation today is intended only to provide general information. Nothing discussed should be considered financial advice. This is RWA SegMint. This episode is brought to you by SegMint.io, offering the world's best tokenized collectibles.
When you speak to a lot of collectors in the space, whether it's for wine or video games watches, they often want to own it.
And own it they shall. Welcome to another edition of RWA SegMint. My name is Steven Schill. Without further ado, I'm joined by Matt. We go over graded cards, some crazy takes we've seen, and just some fun about RWAs.
Hi, I'm Matt Bartlett, CEO of SegMint, where we offer you the world's best tokenized collectibles. SegMint.io.
Welcome to another show. Today we have a special guest, the one and only Matt Bartlett here from SegMint, the head of Web3 at VanEck. He's been on the podcast several times, and we're going to talk generally about tokenization and some of the different platforms that are getting all the notoriety around RWAs. Is it good? Is it bad? Some different pretty hot takes from different individuals we've seen across the space as well. But Matt, thanks so much for joining us today. And let's start off with talking a little bit about graded cards and collectible cards, because there's a few things that I'm noticing within the realms of video games. Is number one, there's a lot more card games that are coming out. A lot of the Web3 brands that are venturing into gaming have started with a card game of some sort and are continuing to build that on top of just general IPs across traditional markets are trying to get into gaming from creating a card, from doing just general card collections, because obviously with sports, there's not actually like a game attached to it. It's just collecting for the sake of it. We have the conversations around consumer chains as well, and it's just kind of all roads lead to collectible cards. So curious your take on so many people going out to do something within the card space and just getting into the thoughts around the tokenization of graded cards.
Yeah, I think the IP that's out right now for a lot of these Web3 communities, it's almost like the low-hanging fruit of saying, hey, we could create a collectible card game. A lot of collectors in general obviously buy NFTs, and many of them have, fond memories of things like Pokemon and Magic the Gathering. And so collectible card games are sort of like a go-to. And we're seeing that, right? I think we shared this earlier this week. Deadfellas is doing something. Obviously, there's a Pudgy Penguin collectible card game coming out. So yeah, I think it's interesting.
When we're talking about real world assets and these graded cards, a lot of the platforms that we're seeing are focusing primarily on graded cards. And on the stream, on the podcast, we've had several different platforms from Collector Crypt to Beezie to Courtyard, which are all tokenizing graded cards. And they all kind of have a different method of tokenizing. And I'm curious, has there been any methods you've seen or heard about that you prefer comparatively, or what's your just general take on how these platforms are going out to tokenize a physical collectible?
Sure. So maybe let's start with how they tokenize collectible cards. And, this will be a generalization because there are minor differences and we can go into them. But I think the process sort of starts with authentication and grading. So it's typically handled by an established grading service. You could think of something like PSA. So they assess the card's condition. They encapsulate it to protect its value. So when I say that, think, graded slabs, the acrylic cases that they come in. Then they vault, and not all of the grading services do this. PSA is one that does. They will vault the graded card in a secure storage facility. It's safe, it's insured. And then they'll also issue these high-resolution images, right, and metadata for whatever the collectible is, which could then be passed along to whatever the tokenization provider is. It's somewhat easy, I guess, to mint the digital twin and know that there's an API somewhere that's feeding the information that the item's safe and secure. There's a lot of things that I've learned now just looking at, Beezie, Courtyard, Collector Crypt, which we've had them all on RWA SegMints, and they're all interesting platforms. But maybe some of the differences sort of like breaking them up one by one. So I think Beezie gained traction pretty quickly. They were onboarding users because of the migration to Blast that happened late February this year. And so they were doing activations where, hey, if you submit your graded cards, you could earn more Blast Gold. And so that was a nice incentive for people to get cards in and, of course, help to build up their inventory. I think there's still challenges there for those that follow Blast. I mean, there was a lot of excitement there. They're doing jackpots. Sort of the excitement has died down. And though even Beezie did initially deploy on Avalanche, they were really sort of exclusive to Blast, it seems. And I don't know if that's still the case, but in general, people have different chain bias. Not everyone's comfortable or even has used Blast, right? So you're really limited by that chain. On the other hand, Courtyard took a really unique approach to starting their inventory. We heard Nick, the founder, bring up about how he got a $500,000 business loan to buy that initial amount of Pokemon cards. They did some cool things with the vending machine mechanism where users could purchase packs. They open them, they reveal the card, and then if collectors weren't satisfied, Courtyard would do the buyback. And that was a really smart way to drive engagement, which I think may or may not still be working, but they seem to show high volume still on marketplaces like OpenSea. I think Collector Crypt, though, is really my favorite, and I've used them personally quite a bit. They take a different approach, and I think a lot of that sort of starts at the top. Their founder, Thomas, he's just a really avid collector. He understands the concerns that typical collectors have from, creating a user-friendly experience through sort of being thoughtful about the platform features. And so, sort of funny story, yesterday, I actually spoke with a TCG store owner based in LA. And I was just trying to pick his brain about these different grading services, the vaulting and more. And he mentioned that as a store owner, one of the primary reasons that he would like to vault, or if he does, is really just to reduce workload. So imagine you're a dealer with 1,000 cards that you want to vault, possibly for tokenization. Well, each card requires that metadata, right? So what's the class, the type? Bottom line, it just takes hours to catalog these things. And so for many dealers like him, they prefer consignment shops where they provide you with this prepaid envelope. You fill up the envelope with the cards, you mail it out. And from there, whoever has to do it has to do all the dirty work of cataloging all the cards, but it's just so much easier, right? And it saves them time. Collector Crypt does something, it appears something close to this, where when you deposit cards, you're just inputting data like how many cards, what do you think the value is, and just like tell us about the cards, and then put it in an envelope. I don't know if part of their process means that they're taking custody at some point to catalog those themselves, or if it's going directly to a vaulting service that's doing it. But sort of interesting use cases, interesting best practices, I guess I'd say, across platform to platform.
Well, I think for the consumer too, it's a lot about inventory, where when I was collecting Pokemon cards, because I really got into it a couple months back, and I went to one of the local stores and they just hand you binders and you have to go through all of it. They also had like a stash of those graded collectible cards, and they were kind of more expensive than I thought overall. I'm like, okay, if I want to get like a certain Pokemon card, I just have to now find a shop that would have those ones. And for that particular one, I think they had about like 150 graded cards in total, and they didn't have some of the ones that I was looking for. And so for these different platforms, as you're seeing them all tokenized, they all are on different chains as well, which I think is interesting that it's not kind of like a single hub for this. And so I'm just kind of curious with the inventory questions of these different sites, with the blockchain being kind of the only differentiator, except for the different reward cycles or perks for trading them in. How do you think the collectible card space shapes up moving forward on the blockchain?
Yeah, I think there's still an issue about on the adoption end of I'm a collector of different items. I think you are too, to some degree, right? When you speak to a lot of collectors in the space, whether it's for wine or video games, watches, they often want to own it and they want to possess it. And I definitely feel this way. Recently, I bought 11 pristine 10 cards as part of that Vibes collection off of Collector's Crypt. And what did I immediately do? I went there and I burned the NFTs because I want to redeem it for the physical items, right? And so when you think like, why would a collector want to use vaulting? The most common answer is usually for security. For instance, the card's worth a significant amount. You don't want somebody to steal it. And, going back to Tom, I forget if he said this on his podcast with us, but I know he shared a story at one point where he had a massive collection of Magic the Gathering cards, and unfortunately there was a fire at his house and he lost them all. And so they were worth quite a lot. Beyond that, though, I think most people want to own them and they want to have possession. This is why you start to see, or we've started to see some of these platforms offer incentives like royalties, for example. Tokenize your cards, will give you a 1% royalty into perpetuity each time it trades. I just don't know if that's compelling enough. Again, I just mentioned that I bought cards, and what did I do? I burned the NFT and redeemed them right away. So if people are going to do that, and that might be somewhat common, how many times is the card actually going to trade hands for you to accrue that royalty before somebody redeems? So not sure that incentive is enough. Of course, when you do sell, you are somewhat on a global marketplace, so presumably you'd get a better price than you would at, let's say, like a local collection trade show. So there might be something there. And another option or reason to tokenize that, again, it's the platforms telling the collectors why they should do it, not necessarily the collectors wanting to, but there's lending solutions. You've got this $500,000 Charizard Grail. How would you like to get, 40% liquidity back at a decent interest rate? I don't know, maybe. I don't see that being a primary appeal. So in summary, I think there's an opportunity for maybe SegMint and others to stand out on for the collector. Something that we can come up with that really gives them a good reason to really tokenize these things. And there's probably a lot of work to do on that end.
Well, I think there's a little bit more than just keeping the cards safe, because if you're going out there and trading, I've seen so many people post about getting scammed or talking, and I mean in like the traditional one-to-one over some online marketplace of just trying to buy and sell cards where you have to go it out, ship it, mail it, have it right. If somebody complains about something, the refunds go through a certain platform. Do they go through you? Having to deal with that headache. I really think just the blockchain angle really opens everything up for more possibilities with it. But you brought up SegMint potentially being interested in there. So can you talk a little bit more about SegMint? Obviously, they're a sponsor of the podcast itself. But what is SegMint doing, and why potentially would you be jumping into the collectible card realm?
Yeah, so I don't want to make it a SegMint commercial, but if you've been following us, we do offer this tokenized collectibles marketplace that it's primarily offering fractionalization, what we call SegMint keys. It's really exclusive to people outside the US. Well, as a platform, we're trying to get users trying to find product market fit. So we're going to expand into also offering general marketplace functionality so that users can buy, sell, trade any sort of NFT that's approved. And then sort of the next roadmap item, which we're hoping will be more March or April, will be the tokenization of collectible cards. It just makes sense to start there because when you think about cards in general, they're small in size, they're already graded. It's easy to get insurance. They're inexpensive to ship. I mean, compare this with I don't know, a large collectible, a bottle of wine. There's just different sets of rules for everything. And so by starting off with cards, it'll help us to figure it out, right? I mean, this is a space that we want to figure out. We think it's important for the years to come. And hopefully we could do something different, novel, that does help us to find product market fit with users across both Web 2 and Web 3.
Well, let's continue this conversation around collectible cards because, one, I'm intrigued by it, and two, I feel like we're on a roll with it. And I think grading is something that is vastly underrated for anybody that is not aware of how the card market works, because it's pretty damn expensive. It's not something you just say, hey, I want to get into it. Looking at PSA, which stands for Professional Sports Authenticator, they have a bulk deal where you have to be like a membership on their platform, but it's $14.99 a card, and that is the cheapest option. If you go up to a bulk value, it goes up to $20 a card. If you look at Beckett Collectibles, they're at like $34 a card. For all these other ones, there's CGC card certification, KSA certification, SGC grading. There's all these different brands that have different turnaround times, different costs for their cards. Some have no limit on the amount, some have a limit. If you have a more expensive card, generally speaking, they also charge you an ample amount. So when you go out there and you say, hey, this card that's graded is worth X amount, well, that doesn't really show you the hidden fees. When you get a bill, you can see all the fees behind it. In the trading card space for collectible cards, you don't get to see all of that, where I think at some point, I mean, when we had, I believe it was Proofworks on one of the earlier episodes, they were talking about how they were working directly with distilleries. It's just making me think there is a huge realm where these grading services, if they want, they can highlight everything of the costs between it, all the data sets, because really that's what the whole blockchain is about. Well,
Yeah.
it also offers people to potentially get instant liquidity on these different marketplaces that they're able to use. What do you think of like the hobby versus people that are going out there to collect? Like, I just think that there is a huge realm of people that aren't in collectible cards right now. But if a brand that they're interested in starts launching it, where you mentioned Pudgy Penguins, then all of a sudden you have a whole bunch of people that are now paying attention to an entire hobby and ecosystem that might not have gotten that traction otherwise.
Okay, yeah. I mean, there's a lot to break down there. So one of the angles that we're going to try to take is deploying on Abstract as well, which is Pudgy's new L2, and they're trying to focus on consumer crypto, and hopefully that works. And then we're going to try to hopefully tokenize some of those new Vibes TCG cards if we can. And now we're selling to the people who really own the assets that have that IP. So we're selling to the fans. And those fans, by the way, might not be your typical collector. One thing before I speak to maybe the hobbyist, you mentioned really the big names. The store owner I met with, he did bring up another grading service, which is interesting, called Tag or Tag Rating, using AI to do the grading. So now you're reducing the human error, right? That you got one grader from another, and so that's really interesting. And I think there's interest for that dealer to maybe use them, but on a cost basis, I guess it's still very difficult to compete with PSA because of the amount of volume that they do. So they're probably still leading the pack. So going to the sort of more of the hobbyist side, I've heard a couple things, right? And I really have been trying to speak with people who are avid collectors. I've heard things like Spencer from Vibes TCG. He's an old school collector. When he does card deals, he likes to do them in person. And he's talked to me about someone flying from Italy to New York just so that they could do the card deal in person. And oftentimes he doesn't even submit his cards for ratings. He knows what the rating of the cards are. They're able to determine that. And so I've heard that more than once from different collectors. I had a guy yesterday that does breaks. He breaks open boxes on Whatnot. He thinks grading services are a scam, right? I mean, this is one opinion. The store owner himself, he's constantly buying and selling cards. The majority of them are not graded. So again, he is the grader. It's kind of interesting. If you ask people that are in the industry and who have been collecting a long time, they think it's all a big racket. Well, if you're trying to tokenize cards, though, and you're really, when doing that, you're trying to establish authenticity, we have to rely on a grading service. And so, that's why as we're looking to figure out who we're going to use, yeah, we are looking at PSA or CGC. No matter what you think of them from the collector point of view, we still need to know that, hey, are these things authentic? Because whoever it is around the world is going to want to know that this digital twin that represents the card is tied to a card that's the real deal, right? And so, yeah, there's a lot of nuances here that we're still having to learn. And again, I'm glad we're not trying to tokenize everything. I can't be an expert in wine and cask and watch. I mean, just figuring this industry out is a beast. But there's still a lot of work to go. But yeah, I think kind of putting the hat of the collector on or walking in their shoes is what we're really trying to do right now to make sure that we get it right.
When people say that RWA, and back to the narrative point of view, is more legitimate, I don't think I've ever heard of somebody getting a card off of one of these platforms and it being a fake. So good job to everybody so far. We've held the reputation. Let's see how farther we can take it. I want to kind of jump to an interesting post that I saw on my timeline the other day from Anton Gulub, who was talking about RWAs and making a pretty bold claim to kind of try to discredit the industry to an extent. So super quickly here, I'll just read the opening. I get a lot of hate for saying institutional investors will never buy tokenized real-world assets. I've said it before and I'll say it again. You have to be totally delusional to think institutional investors will ever buy tokenized real-world assets. But I'll keep saying it because the truth matters. Big institutional investors have security accounts with prime brokers like Goldman Sachs or JP Morgan. If they want real-world assets, they can buy directly through their brokers or investment banks. We've had all of this conversation around this cycle being led by institutions, the Bitcoin ETF real world assets. We're going to get into some of the top performing coins and ecosystems on that and what really they hold. But what's your take on that? Do you think that institutional players are going to stay away from RWAs?
He couldn't be more wrong. Now, in the short term, institutional investors, I mean, we've talked about this, they just want the most efficient investment vehicle. Again, VanEck, I work at VanEck. They're an asset manager. Others like Fidelity, we're already exploring tokenized assets, blockchain applications, maybe as a way to help investors diversify their portfolios. Pension funds have been looking into stable returns from maybe RWA tokens that are linked to real world yields. In fact, I think there's an Ontario teachers pension plan that has expressed interest there. Hedge funds already do. Brevin Howard and other funds have invested in crypto and DeFi assets to sort of leverage enhanced yield. Ondo Finance gets brought up a lot. Do you know who could actually buy Ondo Finance products? You have to be an accredited investor in the US or a qualified buyer or purchaser. These are institutional investors. So, I mean, it's already happening. I think that, the thing to think about is like when we say the short term, yeah, there's not a lot of interest. There's not a lot of liquidity right now for that. Demand is so sort of low. That's all short term. I mean, think about what an RWA is. It could be a collectible baseball card that's tokenized, or it could just be a stable coin. I mean, stable coins are probably the best example. And you're going to tell me that institutional investors aren't going to have access to that? I mean, I don't think you're following the industry closely. That's my opinion, and hopefully I can go head to head with this guy someday.
Hey, we'll hit it up and see what we can do. But you brought up Ondo in there, and I think that for the narrative around RWAs is, and when you go to some of these different crypto charts, they now have categories. So whether it be DeFi, gaming, RWAs, and they kind of have a list of the tokens and ecosystems that are performing the best within the market right now. And like the top three under the RWA umbrella are Mantra, Ondo, and Pendle. And when you go and check out these different sites, in traditional blockchain fashion, they have kind of all this verbiage and stuff that's half meant for developers, but then they also have like a portal for traditional users. And going to most of them, I was immediately redirected to everything stablecoin related, where it was all yield based. And I was like, we've been doing all of these podcasts and talking with all of these people, as you mentioned, that are working on tokenized collectibles, but obviously stablecoins is a massive, massive part of this. We have Ripple that's coming out saying that they're doing a stablecoin. We have also, not in the stablecoin conversation, but more players saying, hey, we're submitting for like an ETF. But it seems that there's all these institutional players, to stay kind of on the topic from the one before, that are really looking at this space. And for real world assets right now, it feels like the only attention is for stablecoins and nothing else. So what's your take on that? Do you think that that's just because stablecoins are massive and everything is becoming more digitized, or do you think that there's room for these collectibles to really start to catch up?
I mean, the ability to tokenize currency is just a massive opportunity. And if you think about like on the traditional side, so I used to work at Franklin Templeton. At the time, they had 105 different mutual funds, and they also had a money market fund, a money fund. You could almost think of a stable coin as the money fund, right? So, it's where you go temporarily. As you think about some of these managers creating tokenized strategies, well, when they want to go to cash, where are they going to go? They're going to go to a stable coin, So, yeah, I think that they're popular for a reason. It's sort of laying the groundwork for us to be able to have other types of innovations around investments.
Do you remember when you first got into the space and what you remember? Did you ever think that we'd be at a realm now where everything is getting tokenized? And do you remember what led you to really kind of believe and dive into everything on the blockchain?
Gosh, when I first got in the space, 2016, it was just, we have meme coin mania right now. Back then, my friends and I, we were buying coins like OMG, Power Token. We were speculating like you wouldn't believe, because it was one of those markets where you couldn't do wrong until you could, until it all crashed, right? I don't think we were thinking about the real application of them. Some of those coins I mentioned or tokens were in a way like early DePIN projects, but we weren't really thinking about it that way. It was just more hype trading, So Yeah, I don't know if I was thinking about stable coins back then. I think, obviously Bitcoin, the earlier you got Bitcoin, the better that you did, obviously. But, some people right now who are seeing the price at around 70,000 might think, "Oh, wow, it's interesting." But they're not really thinking about why is it interesting? That might take more time. So maybe they start dipping their toes in now, and as they learn more and they get more exposure, they begin to really realize the use cases for some of these coins and tokens.
Well, can you tell us a little bit more about kind of coming up through that initial stage of finding crypto and seeing? I mean, I can imagine early days the on and off ramps must have been terrible, or were they all right?
Yeah, pretty bad. I mean, I ended up being a pretty early MetaMask user, right? And I continue to this day. Had Coinbase, they've been around for a while, obviously. Listen, it got started. I was at a conference, a sales conference in the summer of 16, and a guy behind me was not paying attention. And I said, "Hey, what are you doing?" He goes, "Well, I'm trading Ethereum." What's Ethereum? That's how it kicks off. And he explains it. I go, "Well, what's it priced at?" $35. Okay, I go, "Well, what'd you buy it at?" 35 cents. Well, you start thinking about, you start doing the numbers in your head, and all of a sudden I'm no longer paying attention to the sales presentation, and I'm thinking about how I can get in, right? I mean, so anyway, that's how it started for me, but it's been a long journey since then.
It's funny to just like think of the growth and the different opportunities that have arisen while also having a lot of people that are doubting the general move of crypto. And I think obviously we're not stupid to discount. Okay, sure, there's definitely things that there's been failures, but there's also been a lot of successes. And as someone who's kind of lived through a lot of that, what do you have to say to people that kind of just write off everything crypto and digital asset related right now?
Well, I mean, that's why you end up going towards, the real world application of things, like the easy one, cross-border payments, remittances. I mean, that alone is a great, and I know some will go with, well, that's how you fund terrorism and crime, money laundering. Okay. Yeah. I mean, people will go a path if they want to, but if we're just talking about pure use cases, it's a great one. Bringing assets on chain so that they're more easily accessible, and maybe there's a market where I can't access now, but I can in the future because they're on chain. So it just presents us with a lot of opportunity.
Well, I'm just thinking of the tokens, and generally speaking, if you were to try to get into the space right now, a lot of the speculation is okay, you buy a token, and that's kind of it. You wait to use it, but unless you're a developer trying to build out something, do you have any use for that token? And now, I mean, you look across the space, whether it be collecting a sports moment from NBA Top Shot, whether it's buying a real world asset, whether it's buying an NFT, there's all these different use cases coming up. And so the final question that I have for you on the topic of consumer crypto that we mentioned a little bit earlier and your potential interest here with Abstract and SegMint, how do you view consumer crypto? And is this actually going to be a fundamental change whatsoever? Or is it just, it's a different product that's coming to the market. It's going to fit for some, it's not going to fit for others.
Yeah, so this might come out wrong. I view abstract in its current form as sort of just like a horse of another color. It's another chain, but they're doing some things there that are interesting. And I actually saw a demo of it recently where you have more of a homepage. Like it actually had sort of like an old school AOL vibe to it, where you have this home base, if you will. And from there you could explore dApps, you could explore streamers. There's a lot to do there. They have a new wallet which is sort of Privy, which we use at SegMint, but maybe an add-on for Abstract. What I'm hoping to see here, because if Luca, trying to put the blockchain on the back and less on the front, maybe some innovations around onboarding the Web 2 consumer to where there is no blockchain. You're not thinking about blockchain. You and I were recently testing out the off the grid game, right? I mean, you don't have to know that's that there's blockchain in the background. I mean, it's like we're playing Warzone or PUBG. You wouldn't know. So I think having more experiences like that are going to win over more consumers, and that's why we want to be a part of that. If as us and them and their ecosystem strives to improve onboarding and on ramping.
Matt, if somebody's been listening and they find you super insightful and they're wanting to give you a follow, what is the best way for them to do so?
Well, I could always use more followers on X.com. So at Matt Bartlett VE. I have my blubbernotes.com Substack that I write weekly. Otherwise, I try to get on this podcast every now and then, so maybe that's good enough.
This is marketing communication. The information contained in this document is intended only to provide general information. It shall not be construed as promotion of a specific product, nor as legal or tax advice. SegMint assumes no liability with regards to any decision taken on the basis of this information. Information contained herein is current as of the publication date and subject to change. Certain statements contained herein may constitute projections, forecasts, and other forward-looking statements which do not reflect actual results. Information provided by third-party sources is believed to be reliable and have not been independently verified for accuracy or completeness and cannot be guaranteed. SegMint content may link to third-party content for convenience purposes, and this does not represent adoption, endorsement, approval, or verification of such content by SegMint. All information is based on historic data and does not predict future developments. Using SegMint is subject to risk, including the possible loss of access to your digital assets, money, NFTs, and information. Digital assets involve a high degree of risk. If you buy a digital asset or NFT, you may not be able to sell it, and if you sell it, you might not get your purchase price back anymore. It is possible to lose the entire money paid for minting, buying, and fragmenting digital assets and/or NFTs. No part of this material may be reproduced in any form or referred to in any other publication without express written permission of SegMint.